Ladies and gentlemen, Tesla stock is up about 1/3%, about 0.3% today. Here in this video, I will go over all of your Tesla stock breaking news today, all of your biggest headlines from the market, this Trump-China trade war, and the economic data that we had this morning. Now, here in After Hours, we're going to have some very important earnings. We will cover the actual earnings in the next video, so stay tuned for that one. It's not going to be a make it or break it, I don't think, kind of moment for markets, but they will be important for their respective sectors. Now, as well as that, here in this video, we're getting some comments from Cathie Wood today on Tesla, on robotaxis, and Elon Musk. We haven't heard much from Cathie Wood recently, so it'll be interesting to take a listen to what she says and, well, how we could have 25 million robotaxis out there in the not-so-distant future. And that, my friends, is very exciting. So we have a lot to get into. Let's start here with Tesla's option activity, because the option activity today really is mind-blowing. If you take a look at hedge fund and institutional option orders today, you have 102 different trades totaling $68.23 million with a positive order value of 97%. A 97% positive order value, meaning if, just for simplistic terms here, if you have a $100 bill going into Tesla options, $97 of that $100 bill are going towards buying calls or selling puts, directionally bullish trades. Only $3 of that $100 bill is going towards buying puts or selling calls, directionally bearish option activity. So hedge funds and institutions, while Tesla has fallen from the highs of $488 now down to $385, hedge funds institutions are taking this $103 drop as an opportunity to load up on some bullish positions. And you're seeing a lot of these, orders, a lot of these options trades being for February 7th. Which is this Friday. So actually expecting to see quite a nice rally. And a lot of them are coming in around that $390 call. You can see with some of these prices being paid $7-8 per contract, or $700 to $800 per contract, which puts the break evens at almost $400 per share by this Friday. So hedge funds, institutions are actually betting on Tesla stock to move higher into the end of this week. And you can see the volume today is 62.5% calls and 37.5% puts. So that is pretty damn bullish. You can also see today you have about 83,000 shares that are being covered on net. So you have borrowed shares of 547,000 and return shares of 630,000. That means you have more shares being covered today than are being borrowed or sold short. So that is also a pretty bullish sign. You have short interest of free float sitting here at 2.26%, recently off the highs of almost 3%, $24.26 billion sold short in Tesla, totaling 63.23 million shares that are sold short, which is a little bit of a jump up in the total amount of shares sold short. Now, Tesla stock is up almost 1% on the day today. And one thing I've noticed pretty consistently over the past couple of years, anytime you start to see some very short-term, very bullish option activity for Tesla, it usually is preceded with a much larger rally. And again, a lot of this option activity is expiring by this Friday. And, well, perhaps, not a guarantee, but perhaps somebody knows something good could be coming for Tesla, that a larger rally could be coming for Tesla. And it is worth considering that Tesla could go pretty crazy this week, perhaps maybe next week. Cathie Wood today says that the Tesla robotaxi cost per mile is 30 to 40% lower than Waymo. And this really has to do with Waymo vehicles being well over $200,000 per vehicle. Okay, so your proposed break even is going to be a lot higher than what Tesla's would be doing a robotaxi network. And Cathie Wood is making a pretty bold prediction here today for Tesla. She says that Tesla will have 25 million robotaxis by 2030, which is only 5 years away. Let's assume Tesla does have 25 million robotaxis out on the roads by 2030, times that by $100 of revenue per day per robotaxi. That's $2.5 billion of revenue per day times 365 days in a year. That could be $912 billion of revenue. I mean, you could get some pretty crazy numbers here. Even if you assume a 25% net margin, which would be pretty damn conservative for a tech robotaxi business, that could be $225 billion of profitability. Divide that by 3.3 billion shares outstanding, and you're looking at $69 of earnings per share from just the robotaxi network. That is why Tesla is such a crazy opportunity. If you times this by the current multiple of roughly 120 times, you're looking at Tesla stock and just this aspect of Tesla's business being worth $8,295 per share. I mean, we're talking insane numbers here. Now, could this picture look a little bit different? Sure. I mean, just for the robotaxi business itself, I don't think we would be complaining in 5 years if it was worth $2,000 a share or $3,000 per share, or cut this number in half and call it $4,100 per share. For just the robotaxi business, let alone Optimus, let alone anything else, you know, you could be seeing some crazy numbers. And I think that's what a lot of people forget, especially when Tesla is not going straight up and to the right. It's the opportunity here that is absolutely massive. Take a listen to this 1-minute clip of Cathie Wood saying Elon Musk is extremely focused on Tesla.
Last week, you would see how focused Elon is on any pain points or bottlenecks. So he's highly focused on getting this autonomous taxi network up and running this year, clearly. He's maniacally focused, it seems to me, more than I understood before listening, on humanoid robots. In our big ideas, you'll see a section on humanoid robots, and we think that humanoid robots are going to benefit small companies more than large companies, which is a big change. But as far as Elon spending time making the government more efficient, I'm actually thrilled. And there's something that people do not understand about Elon. Elon understands that we are in the midst of a massive convergence among technologies, and that AI is the biggest catalyst among the 5 major innovation platforms evolving now. So robotics, energy storage, AI, blockchain technology, and multi-omic sequencing. He understands those convergences. He's involved in 3 of them. And data is the name of the game. If you look at all of his companies, they're all spewing out different kinds of data. That's proprietary. And that's the name of the game in terms of winning all kinds of AI races out there. And of course, the government is filled with data itself. I don't think that's why he's there. He's there to make it more efficient, and we're thrilled.
One of the big stories today is China actually imposing tariffs on the U.S. on certain vehicles that go to China. Now, China has long had tariffs on U.S. vehicles. That's why GM and Ford really don't have a market in China. Tesla has a market in China because they produce their vehicles over in China. So that's not really too groundbreaking. But China did impose a 15% tariff on liquefied natural gas and coal, and imposed a 10% tariff on crude oil. And some on Wall Street, especially in overnight trading last night in futures markets, when futures were down about 0.5% across the board, were concerned that maybe, again, this is the start of a larger trade war like we seen in 2018. Now, it was said earlier in the day today that we were supposed to have a call between Trump and Chinese President Xi. Apparently, that is not happening now. It says here, President Trump and Chinese counterpart Xi Jinping will not be speaking on the phone today, a U.S. official said, despite an earlier claim by trade advisor Peter Navarro that they would hold a conversation. The 2 leaders have spoken before, but a call now would certainly center around Trump's imposition imposition sounds weird saying it like that, of new tariffs on China. So this was just retaliation. But, where does this go from here is kind of what Wall Street is a little nervous about. And it is being reported that federal layoffs are likely if too few employees choose to quit. But it is being reported that the Musk buyout offer has been accepted by more than 20,000 federal workers so far, with that number climbing as we head closer to the deadline. It's essentially you get like 7 months of free pay if you quit your government job. I mean, a lot of people are going to take that. Now, Jerome Powell will deliver a semi-annual monetary policy report, and Powell will testify before the Senate panel on February 11th. So just here in the next couple of days. And look at this. Yesterday, Fed Bostic says he wants to wait a while before the next Fed rate cut. But then he says today, were it not for housing, might already be at inflation target. Stable housing has many benefits, including for Fed policy. Now, this is interesting because for the first time last quarter, you actually had year over year market rents negative, which hasn't happened since Q2 of 2010. This is a strong sign that the housing disinflation we have seen in the last couple of months is likely going to continue. And as we get new inflation reports that continue to show progress on shelter, we will start opening the door again for rate cuts. And I think that is when you actually see 10-year Treasury yields come down in a more material fashion. Now, 10-year Treasury yields today are falling. Okay, bond yields are down about 2.5 basis points, down to 4.52%. I do think a pretty critical level here for 10-year Treasury yields is 4.5%. If you can break below 4.5%, you could see bond yields start to really tumble. And the news today that caused bond yields to fall was the economic data. Okay, so JOLTS job openings came in today well below expectations. JOLTS job openings were expected at 8 million. They fell to 7.6 million. So I do think that is a big contributor to causing 10-year Treasury yields to fall, because essentially the more job openings you have, likely the stronger the labor market is. Okay, you normally are not looking to fire people if you're looking to hire people. Right? Just a general, principle. If you need to hire 10 employees, you're not going to let 5 of them go, right? You're looking to hire people. You're looking to add people, not fire people. So the more job openings we have, generally speaking, the stronger the labor market is. The lower the job openings, the faster the decline of job openings, the weaker the labor market may be. So today, not the greatest data on the labor market, to say the least. Factory orders month over month came in at negative 0.9% versus expectations of negative 0.7%. So factory orders weaker than expected. JOLTS job quits coming in at 3.197 million. Versus expectations of 3.1 million, so about 100,000 higher than expected. The RCM TIPP Economic Optimism Index came in at 52 versus expectations of 53.0, so also missing expectations there. Again, we had a speech from Fed Bostic today, did not get much out of it besides the comments again on shelter. And then Fed Daily also spoke today. At 7:30 p.m. Eastern Standard Time tonight, we will get a speech from Fed Jefferson. And then tomorrow, we will get the ADP employment change, the ISM services PMIs. About 80% of the economy is services. 75-80% of the economy is services. So this data is more important than the manufacturing data, especially in terms of inflation. And the big component here tomorrow will be ISM services prices, where prices in the ISM services report have really skyrocketed recently. If you see those come down, that's going to be good for markets. That's going to push 10-year Treasury yields lower. That's going to alleviate some of the inflation concerns. Tomorrow, we do get Fed Goolsbee, Fed Bowman that will speak before markets close. And then again in after hours tomorrow at 7:30 p.m., you will get a speech from Fed Jefferson. Here today in after hours, you do get earnings from AMD, Alphabet, better known as Google, Snapchat, Chipotle, Enphase, Amgen, EA or Electric Arts or Electronic Arts, Lumen, Prudential, and Juniper. So Google, one of your multi-trillion-dollar companies, by that definition, it will be important for the broader markets. Although, it's hard to imagine some kind of disaster following Meta's good earnings. Okay, could they be a little on the weak side? Of course. Are they going to be a full-blown disaster? Probably not. Even Apple, which has been under a lot of pressure recently, we haven't had good news for Apple. Came out and did okay on the earnings, and the stock even went higher. Tomorrow, you have Uber, Disney, Novo Nordisk, Toyota, Boston Scientific, and pre-market. And after hours, you have Ford, Qualcomm, ARM, Symbiotic, Viking Therapeutics, O'Reilly Auto Parts, Align, and Aflac. Thursday, you have Eli Lilly, Roblox, ConocoPhillips, Peloton, Hershey, Bristol Myers, Tapestry, Yum, and Philip Morris. And then Thursday and after hours, you have Amazon, your other multi-trillion-dollar company, reporting earnings this week. Elf, Cloudflare, Affirm, Fortinet, Microchip, Pinterest, MPS, and Powell. So earnings season, yeah, it's not over yet. And then next week, you'll get a lot of your more mid-cap names, a lot of software names, and smaller cap companies. The CNN Fear and Greed Index today really plummeted from yesterday when you were at 46. You're coming in today at 39, so definitely not an improvement here. Fear and you do have market momentum in fear, stock price strength, extreme fear, stock price breadth, fear, put and call options, fear. Market volatility is neutral, safe haven demand in fear, and junk bond demand currently in greed. If we take a look at the percent of stocks trading above their 50-day moving average, you are actually seeing a more broader based recovery today. About 4% of stocks are breaking above their 50-day moving average. You're now sitting at 45.55% of stocks above that 50-day moving average. So you still have 65% of stocks below their 50-day moving average. Like, this is not a great market, but you are seeing a little bit of an improvement today. Now, Atlanta Fed GDP Now tracker, we should have a new update for today. Doesn't look like it has came out yet. Last update we had was 3.9%, which is a far distance away from the blue chip analyst consensus of about 2.3% GDP for the current quarter that we're in. That is Q1 of 2025. Now, we do have some Tesla stock-specific news today. The Cybertruck now officially qualifies for the full $7,500 U.S. federal EV credit, bringing down the starting price of the truck to $72,490 for those who qualify. Non-Foundation Series Cybertruck is also now available in Canada and Mexico. Tesla has also increased the Foundation Series Cybertruck pricing in Canada by up to 11.5%, with a starting price for a Foundation Series Cyber Beast that is now $181,990 Canadian dollars. And the Tesla Model 3 has been added to the Tesla referral program in Canada. And today, CNBC released a new video of Consumer Reports comparing driver assist systems. But there's a problem. In the video, they used Tesla Autopilot, not Tesla FSD. Consumer Reports says Ford and GM have the best driver assist system. The Mercedes system they praise in the video is extremely limited and can only work on highways. Tesla's FSD Supervised will work on virtually any road in the US and Canada. So again, really not a fair comparison when you're just looking at Autopilot versus the other systems. You really should look at FSD. Ford sold a record 5,666 EVs in the US in January 2025, up 21% year over year. Mustang Mach-E comes in at about 3,500, up 172% year over year. F-150 Lightning 1,900, down 15% year over year. And the E-Transit only sold 230 units, down almost 80% year over year. On Tesla's official X account, they write here, front seats learn some manners. If a rear row needs more space to fold flat, front seats in new Model Y will automatically adjust. And Ferrari will unveil its first ever electric vehicle this October, the company has announced. Ferrari says, quote, "It will be launched in a unique and innovative way." And while Tesla's stock has been volatile today, it is now up almost 1% on the trading day. You are off of the lows that you seen yesterday at about $374 per share. A similar low was also set on January 2nd, and that sparked a short-term rebound in the stock back to start off the first couple of days of the year in 2025. You did subsequently bounce into the 430s, and well, you're back down to that level. Question is, do we bounce again? Can we find some strength in Tesla to get us closer to this trend line around the 403, 404 level? If you can break this downward sloping trend line that has 1, 2, 3, 4, 5, 6 touches to it, then, well, anytime you've seen a break of a resistance trend line like this, it has led to large rallies, which would subsequently cause a breakout, most likely into the 450s, potentially as high as the mid 500s. Again, just depends how this trade war situation plays out and any new developing headlines that do come out. This market is very sensitive to the headlines right now, and well, that includes Tesla. Again, just to point out the information in the beginning of this video, I mean, there is a lot of people today in hedge fund and institutional land that is placing some very bullish bets on Tesla's stock. Perhaps they know something, who knows, but they're bullish. And normally when they are bullish, it's kind of a little bit of a heads up to what could come next, because a lot of the time they do have more insider information. They do know people at Tesla. They get information before we do. And if they're placing short-term call options and bullish bets on the stock, a lot of the time it does, kind of foreshadow a larger rally to come. So let me know what you guys think about that down below in the comments section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.